Good morning and welcome. Picker Radio News Hour. Joe and Jason on this Thursday. I guess the big anticipated day of the week this week as we had inflation data. This is the big inflation report, the Consumer Price Index. And Jason, it was a doozy. I mean, we knew going into this that it was going to be a year-over-year number that was going to be low. We knew that. We had a big number fall off. Remember, this was right around when inflation, the way they calculate it, right? You got to remember that. The way they calculate was peaking right at that 9% level. So those big numbers come off, but the headline number, it came in like we thought. It was lower. It was in the threes. Headline inflation, we're looking at, 3 and change, but then the core. Now, this is something that the Fed tells you, we like the core better. That's more accurate. None of them track inflation. I say it all the time. None of them track inflation, but nonetheless, the headline number came in, I want to say it was 3.2 or 3.3, 3.2 year over year, which is, hey, by all accounts, it's still more than 50% higher than what they told us they wanted to be. But obviously the lowest number, core CPI, however, not as kind. 4.7%, and then they said, well, if you take out this and you take out that and, you don't count this and that. But in the details, so early on, so we get the headline number. Gold's up, silver's up, the Dow is screaming, up almost 500 points. In the last couple of hours, I think everybody's kind of looking at it going, wait a minute, okay. Maybe Jason and Double know what they're talking about. I mean, we had a big number fall off, but the actual data inside of it, especially what's happened with food and energy prices. When I talk about food, I'm talking wheat, corn, soybean, right? All these commodities. Jason, it looks like this may be the low water mark here for a while, and that maybe, as we've been speculating, inflation isn't going to be back to 2% anytime soon.
Yeah, this number, the year-over-year number almost speaks to another rate hike. But I've been measuring it also as adding the last 2 years together. If you do that, it is actually lower than last month. So technically, they can say the inflation is going down now. I thought this number would be lower than 3.0. I thought it was going to continue to trend down. So the fact that it's up is, I don't think that's very good news, Joe, for the Fed trying to get this inflation under control. But it is lower, 8.5 and 3.2 for this month. And then last month it was 9.1 and 3.0, which means it was a little higher for the last month than this current month that they're putting in. So we'll see what happens. They better not get a 3.2 next month, Joe, or things are going to get a little hairy for them. They want that 2%. They got to get to that where they can honestly tell the other wizards of economics that they can legitimately pause the rate hike. So this one's kind of, they got another one next month, I think, before the rate hike or before the rate decision. Yeah. So we'll see how next month
we do get, as Jason just said, we get one more of these before the next rate hike. But this was, at least as far as I'm concerned, this was the big chance here, right? This was their, I guess, the opportunity, the window of opportunity, because this next report, right, we're going to start seeing the big increase in the inflation data. And, of course, I mean, in oil and all of those things. And, of course, they like, well, let's take out food, let's take out energy. I get all that, but I don't think they're going to get a lower number next time. So this is going to be problematic here. I think this is what Wall Street's kind of sensing is, okay, wait a minute. This wasn't low enough. And there's a real good chance that the next rate hike, instead of it being a pause, may now be back on the table because we're going to get one more of these. And can you imagine an uptick in inflation and then the Fed not reacting and not raising again? This is the dilemma. This is not good news any way you slice it.
I think, Joe, it has to be that the year-over-year CPI has to be 3% or lower next month for them to pause. And if it's not, if it's 3.2, if it's just 3.2 next month, I think they hike it another quarter point. That's going to create a lot of heartburn because this number, if you look at the December number, which is about 5 months ahead of us, it's 2% lower year-over-year numbers. And I don't see inflation really in actual cost of things around me looking like they're stopping the upward trend completely. So I don't know how, with comparing to last year's year-over-year numbers, I don't know how they can get a 3% in December. I mean, I could see 3, 4, even 5% by December unless they really, really, really are on top of it. So we'll see, Joe. We'll see how these CPI numbers work in the next few months.
Yeah, I mean, come on.
Last year was a big drop-off. Every month, a big drop-off.
Right. So the problem is core's at 4.7. I mean, and I know at core – they strip out food and energy and that stuff. By the way, shelter, which obviously that's our biggest cost, right? How much does it cost for the mortgage? How much does it cost for the rent? It continues to escalate up 4.10, 7.7 year over year. Wages up another 3/10 real wages. So these are things that I think are going to remain elevated on top of food and energy coming back. Patriot Radio News Hour. We're going to talk about what's coming next. AmericanGold.com is the website, and a quick look in. So let's just take a quick look at the markets. The headline CPI number came in nice, right? Nice, 3.2. All the other, the core X shelter, and all these other things that they like to do, higher than expected, and that now has kind of unnerved Wall Street a little bit. I mean, it's still higher. Listen, the Dow was up almost 500 points. It's now up 200 points. The S&P's up 28. The NASDAQ is up as well, just under 100 points. The 10-year note, which was below 4% when the data first came out, now rallying back above 4.03 and heading, unfortunately, going to be heading higher. Gold and silver were up initially. Gold's really not doing a lot right now. Off a couple of dollars here, $1,913. Same thing with silver. Silver's up a couple of cents. I mean, not doing a lot. $22.75. And again, I think the higher for longer. The problem is we don't know how high rates are going to go. People thought, it'll go to 4%. Okay, well, no, it's going to be 5%. And then, maybe it's 5.5%. I'll go back to Bubba Horwitz. I hate to say it. Is he going to call this thing right? Jeff Gunloch and others saying 6% plus. This was not the report we were hoping for. We knew the headline number was going to be low. I'm really surprised at all the other numbers inside of this. This just means interest rates are going to be higher. Banks today are not happy. Let's just say the banks today are not happy. The warning out from S&P, the downgrades. I'd be very, very, very careful right now. If you're looking for a place to hang out, check out our friends at Y Refi. You hear Jay? We've been talking about them for all year. Up to 10.25% return. It's not correlated to Wall Street. It all has to do with defaulted private student loans. One of these days, I'll get Lane on. We'll break it all down for you. It's a great thing. This just tells you why refi does. Tells you we don't need government. We need less government. We got to get rid of all this stuff. Talking about forgiveness and all this other stuff. Why refi? They're the best in the business. Up to 10.25% returns, and it's fixed. You know what it's going to look like every single month. People do it. They put a bunch of money in there, and they say, hey, you know what? Every month, just send me my interest payment. Give me my money. You know what? They use it to supplement their Social Security. Heck, some guys are getting it up. They just like, yeah, that's what I live on. I just keep my expenses right there. It doesn't change. Invest. YRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them. 888-YRefi-24. So, again, the headline number, everybody liked. They came out with a bunch of other data points that we don't always see when they release this number. So today they were like, well, hey, take this out, add this, minus that, and look how high it is. One of the numbers that they really looked at, which they're calling the new Fed favorite. So the Fed has always liked the core CPI. That's always been their number, which was 4.7%. Now, see, that's tough. 4.7, and you're promising 2, right? That's almost 2.5 times. And, of course, why the heck would we care about core? Because what was core? Take out food and energy. Well, you know what? It'd be great. Hey, tell you what, Jay Powell, I'll just pretend I don't have to pay for food or energy and see how long people live, right, Jason? I mean, it's actually ridiculous. Well, why did they like it? Well, because that usually made the number lower. Well, that number's not low enough. So this year, they came up with a new Fed favorite. Remember, we called it the super core. Well, what the heck was the super core? Well, let's see. We're going to take out food. We're going to take out energy. Well, what else could they take? Oh, here was their great idea. Let's take out shelter. Yeah. Let's take out where you live. We're not going to tell you where you live. We're not going to talk about the food. We're not going to talk about the energy. Essentially, let's just go back and pretend we're all cavemen, Jason. We're living in a cave. We got to collect wood and create fire on our own and go out and hunt and gather. That is now their new favorite. It is the core CPI X shelter, i.e. the super core. Well, guess what? It went from 3.9% last month to 4% this month. So it actually went up. And, of course, now remember, right, core CPI 4.7, this new favorite one 4.0, right, it's still lower. But, Jason, this is what got everybody rattled today is those numbers, the core CPI and then the quote-unquote super core going in the wrong direction.
Right, and if inflation is not well under control in 2024, Joe, Bubba Horowitz, did he predict, was it 6%? Is that what he predicted?
Yeah, Fed funds rate, so that's what,
it could be higher than
rate
that.
hikes? Yeah.
It could be higher than that. If I'll tell you right now, I was watching a guy who's presenting a case for the elections next year and why, the Fed is trying, I think the Fed wants to kind of be very quiet. I don't think they really want to catch a lot of attention. And the guy made a really good point. I don't like either side of the aisle. If you listen to me, it's pretty obvious. But Biden has been very quiet and lenient and just letting the Fed do their thing. He doesn't say a single thing. You don't see but if Trump is in office, if Trump needs things to go his way, he's vocal, he's critical, and he brings up too much attention to the Fed if things aren't going his way if he were to win next year. So I would say if inflation just keeps on pushing hard next year, Joe, even just medium hard in the upward direction, I think you see the Fed keep raising rates, and if they have to secretly inject liquidity to failing businesses to try to keep the recession from happening, they'll do so. So we could see more than 6%. We could see 7%. We could, as high as it needs to go to keep inflation under control for 2024, Joe. We'll definitely be watching it, but it's a good case. This gentleman, a real good case for why the rate hikes will happen as necessary as it needs to be to get a quiet president there so they can do their deeds a little quieter next year in 2025.
Yeah, and it is, you do bring up a great point. Joe Biden, he probably doesn't even know, right? Does he even know Jay Powell's name? Probably not. I'm pretty sure he doesn't know what day of the week it is. And again, this has definitely been a change, right? This has definitely been a change because, say what you will about Trump, the one thing, unfortunately he reappointed Jay Powell, which I thought was a huge mistake. And of course, the person that comes after Powell is going to be even worse because it looks like Lael Brainerd is the choice that most people think. She's even a bigger liberal. She rivals Janet Yellen. But yeah, no comments, right? As inflation's been raging out of control here and trying to say what a great economy we have. It's going to be interesting because we got money supply continuing to track down. This is the 8th straight month of money supply contraction. It's not supposed to be like this. It's not supposed to be like this. They cannot be happy. But this is the box. Go back to before they started raising rates. Remember when they were using the word transitory? We could have been a whole year ahead. Think about how much better off we would have been right now. We could have been, rates could be 6.5%, 7% if they needed to be already. But no, they wanted to keep the money printing press going. And now we even before they started raising rates, Jason, we're talking about, look, they're stuck. There's no good answer. I wish there was. Listen, I wish there was a soft landing. There's no soft landing coming. I'm sorry. This number just proves out what I've been telling everybody from day one. There's only one way inflation's going down. And this is going to be a painful, and I don't know what word, they're going to want to use. Right? We've already used depression, right? We used that in the 30s. We've used the word Great Recession, right, during the financial crisis. I don't know what they'll term this next one to be. When you've got a 2-year note yielding almost a full percentage point above a 10-year note, that is not good. The inverted yield curve, Jason and I talked about that last week, right? We're talking about record levels here. We're getting ready to take out the Great Recession right next month. And then by the end of the year, this inverted yield curve will take out the Great Depression. And again, the money supply contracting and yet inflation kind of reinvigorating itself, right? Shelter hasn't gone down, right? This isn't supposed to happen. Listen, mortgage rates are over 7%. I know that sounds crazy. My wife and I's first mortgage was in 2000. It was 7.25%. Right, which at the time, that was pretty low. Of course, now it's like, oh my gosh, this is the highest levels in 20-some odd years. And the realities are this is supposed to be driving prices down. It's not, right? Why? Well, because of the Fed's policies, right? When you have interest rates at 0, when you can get a mortgage for 3 or 4% like a lot of people did, none of those people are going to move. There's no inventory out there. Rents are expensive. And so when we're looking at all of this stuff, Jason, again, I think they're in this box. They're damned if they do, damned if they don't. And the problem is this number's way too high. Core CPI at 4.7, their new super core at 4%. We're going to get one more data point here before they have to have their next meeting. Everybody was hoping for a pause. It doesn't look that. I mean, now listen, we can get a shocker 30 days from now. I don't think we're gonna. I mean, look at what's happened since this number's come out. Crude oil went from 70 to 84. Right? We all of a sudden wheat just took off. Rice has taken off, right? All corn, the harvest is not looking good here. Jason, there's way too many things I think that we're going to see. The Fed is going to be forced to hike a lot more than they wanted to.
And it's, there's a lot of treasuries being melted off of foreign countries' books, and that also creates inflative pressure because, hey, we got, 2 weeks? We got the little meeting from the BRIC nations, and they'll probably, yammer on about the gold-backed currency that they're going to think about. All these pressures, Joe, is very inflative. And I mean, it wasn't that long ago. China was the number one holder of U.S. debt. So they're selling. They're really selling. And Japan, what if Japan decides to start selling, Joe?
Japan is selling. So Japan, and they have to, right? Here's the problem. China, one of their big property companies just missed an interest payment. And I don't know if it was S&P or who. Well, I want to say it was S&P. Just downgraded them deeper into junk today. China's economy, right? They're doing stimulus right now, so they're selling treasuries. Japan, same thing. We've got to do stimulus. This is, well, it is right where we told you it was going to be. Gold just turned positive. $800-951-0592. Joe and Jason, Patriot Radio News Hour. Gold now up a couple of dollars here. We'll continue to watch. 1917, call it right now. Silver up 11 cents here, $22.84. Today's special, U.S. $10 liberties, 1 through 9. These are the half-ounce pre-1907 or 1866 to 1907 to be exact. 1,080, 1 through 9. 10 or more at 1,075. As again, continues to be the best price per ounce in old gold by far. Without a doubt, it's the cheapest entry place into the market, and we're going to make it a little cheaper for you today at 800-951-0592. And Jason, just to look at things, we warned you about things that are higher. Shelter, car insurance. Remember, we warned you a few weeks ago, right? The huge losses from the car insurance. By the way, the electric vehicle, yeah, they keep catching on fire the way they've been catching on fire, and a fender bender costing $40,000. Insurance on electric vehicles expected to really spike, but that was what led to the increase, 2% increase in motor vehicle insurance. That's going to increase every month for the rest of the year. Here's what fell. Airfares. I don't think here's the problem. That's not going to happen next month. Right? I mean, look at what oil prices have done. So that's probably short-lived. Used cars and trucks fell 1.3%. And here's the funny part. Out at allamericangold.com, there's an article out there. Try to find a used car for under $20,000. Good luck. Right? At least something that, is anything close to respectable. You can buy a car for $10,000, but hey, at any moment that car could break, right? I mean, that's, buying a decent used car for less than $20,000 is almost mission impossible. Medical care fell, which, I have a hard time believing that, but okay. Hospital services was the other thing. Prescription drugs was unchanged. Really, Jason, that was about it as far as the declines. And I think that was the problem. not enough declines. We're not seeing food decline. Airfares looks like they're headed back the wrong way because of energy prices. And then, of course, the auto insurance, that's going to continue to rise. But I will say this on the used cars. All the used car dealers, there's a bunch around, and I tell her, I lease out a space to a used car guy. They're all telling me the same thing. Yeah, prices are down a little bit, but people are having a hard time getting a loan. Because obviously a lot of people, when they're in that used car, not everybody, but they tend to be, hey, I've got a few dings on my credit, and there's a lot more people walking around with things that are more than just a little ding. We're talking about repossessions. We're talking about bankruptcies. Apparently, according to my buddies that are in this business, there's a lot of that walking around.
I live in a pretty decent neighborhood, Joe, and the other day I was driving into my neighborhood in this really nice car up on a flatbed truck, just repoed, pulled right out of the neighborhood. And that the people where I live, they usually can handle the car bills, but apparently not. This car was not broken down.
Jason's being pretty modest. It's a nice area. I mean,
it's a nice area.
Yeah. Well above the median house price, let's just say that. So, yeah, when the repo man is hanging out in your neighborhood, right?
And that's twice I've seen it now. It's just in the last couple of weeks. So, and that's just, I don't drive around my neighborhood all that much, but if you're seeing that, and Joe, yeah, you're exactly right. I remember when, if you had to buy the junker that can get you for a few months until your financial situation improved, you almost do that for under $1,000 not too many years ago, maybe under $3,000 or $4,000. But that junker to get you through is starting to be like the $7,500, the $9,500 car now. That's just to get you a few months of car, and who can afford a few months of car at $7,000? But that's right. Kind of what these cars are now, Joe.
Yeah, you're right, man. Well, you talk about, hey, I'm going to buy a car for less than $10,000. Yeah, that's a man. Cross my fingers and hope I get by. Right, you're man. If I can get a year out of this before it breaks down, good luck. Right, and that used to be. Hey, listen, that used to be a $2,500 car, $3,000.
Yep.
Right now it's $10,000. Right, it really is one of these.
Well, Joe, it's essentially the $7,000 car, which has a lot of problems. You put the $6,000 to $7,000 in repairs into it, and now you got the $14,000 car that you should have bought that'll have at least some dependability. That's all that is. I mean, these car dealers know what they're looking at. They're like, look, we could put the $7,000 in and sell for $15,000, but maybe there's more here that we haven't checked out. There's just too much risk for them, so they'll dump it on you for the $7,000 and see what you're going to do to fix it. So it's just numbers, Joe, and the numbers are saying that a decent car is $20,000 now. That's just I can't believe used cars are $20,000. That's just mind-boggling that a used car is $20,000, John. I mean, an average car. It's a lot of money.
Yeah, I mean, and you're not setting the world on fire. It's with a $20,000 used car, but you can find, something reliable. It may not be. Listen, you're not getting a Beamer, right, or a Mercedes, right? You're not getting one of those. But you can at least get a reliable, whether it's a Kia, Hyundai, maybe a lower end Toyota, something like that.
Toyota Corolla.
That's what you're talking about.
It's a Toyota Corolla, Joe. I know. Those are the cars I buy. I buy transportation. I don't buy anything fancy. So that's, yeah, I mean, I used to buy a practically brand new Toyota Corolla earlier this century for like $10,000. Perfect. Like no miles, maybe I had somebody leased it for 6 months, turned it in. It's got, 5,000, 10,000 miles on it, and you can get it for like $10,000. That same Toyota Corolla is like a $22,000 car now, $23,000 used, right. Slightly used.
Yeah. So I don't know. This wasn't the report. We got that headline number, man. That headline number 3.2. I'm like, okay, yep, that's what we expected. And then all of a sudden, all the other data points, and like I said, the wheat, the rice, the corn hadn't started rallying yet for these numbers. Crude oil was like $70, not $84, right? Remember unleaded gas? Gosh, it went down like unleaded gas there went down like $1 a gallon during this time. Of course, now it's going the other way. Looks like we're going to go even higher. Gold's having a real interesting reaction now, up $3. Are we at that point where gold's like up higher is actually better? Maybe. We'll see. Patriot Radio News Hour. We'll be back after the break. We're back here, Patriot Radio News Hour, Joe and Jason on this Thursday. If you're just joining us, the inflation number headline CPI gave a warm fuzzy that maybe the Fed can pause again. Unfortunately, it didn't really work, as all of the other data points are pointing to rates that are going to be, well, let's just call it like it is, Jason. Rates are going higher, and the way the data points are looking as we're watching this, we're not one rate hike away, right? I think that's been kind of the thought process on Wall Street is, hey, all right, they probably got one more rate hike. That's not what the data said in this report. And everybody's kind of knowing, hey, listen, we expect inflation to pick back up again, at least here in the short term, which says, hey, do we need 3 more rate hikes, 4 more rate hikes? And then the money supply, think about this. The money supply is down like 13%. Unfortunately, to get back to where we were before the Fed printed all that money. We found out, man, the Fed printed trillions of dollars. The money supply, Jason, needs to contract 22%. So we're still a long way. I mean, the money supply contraction, Jason, that looks like that's got to continue for the next 6, 8, 10 months as well.
Yeah, I agree, but I'll wait till next month's CPI, because I think if next month's year over year is 2.9 or lower, if it just comes a little lower, because remember the previous year, this is where all the rates the year over year numbers are coming down from the previous year, so they are battling that. But if this 3.2 number continues to go up, Joe, or stay the same or just go up a little bit, yeah, there's more rate hikes. But I'm not going to call rate hikes for sure, yeah, because there's just a lot of time between now and then the next decision the Fed has. But regardless, it's all really bad numbers. There's still inflation that's higher than it should be. Here it is. We're talking. They've got us put into that position where we're talking about how good or how bad is the inflation. There should be no inflation. We always got to remind ourselves. We had a time in this country where there was no inflation. There doesn't need to be any inflation. Honest money means no inflation. So sometimes it always irks me that we have to talk about the level of inflation we've been enduring the last few years. Is it getting better? Is it getting worse? It's all worse, Joe. It's all bad. It's just what level of bad are we going to be at?
Well, and again, I think to Jason's point, the headline number here was good, but it was all the other data points that weren't, and I expect that to continue. But you're right, yeah. Everybody was thinking that we would get below 3% by the next print. That was, who's everybody? Well, Wall Street, right? Why was Wall Street 35,000 heading to 36? That was why. Right? Hey, no. Remember, forget about a soft landing. We're going to have no landing. It's great. Of course, unfortunately, the actual data says it's not. This is going to be something where, we haven't done jobless claims. Spiked up, we'll see, 248,000 jobs today. So that's, we've been in the 220s, 230s. But I don't trust that jobless stuff anymore, Jason. I'm seeing these numbers. They don't make any sense, right? You got, like, Ohio had a huge jump. Unless yellow freight is all in Ohio, I don't know. That data seems to be really weird. A lot of data seems to be really weird now.
Well, I still think the jobless claims is still not high yet because there's still job shuffling. We talked about the lower wages, hours being cut. None of that gets into the jobless claims, the first-time jobless claims. Just not there. So until all of the job shuffling and the cut to hours and all this stuff comes to an end, which it will at some point, these businesses will have their core employees and are just going to be holding on. Then you'll see, hey, everybody else just gets cut. Everyone else gets, at some point the business has to decide who's essential and who's not essential to my business. And then the jobless claims will climb. So I still think there's a lot of shuffling going on, Joe. Let's face it, these businesses are having to deal with wages going up, even though they're not going up as fast as they should. They're having to deal with wages going up, Joe.
Well, I think about this too. Really, why are tax revenues down so much? Why are tax revenues down so much? And people say, well, corporate profits. Dude, corporate profits, they're the smallest piece of tax revenue. You know what the biggest piece of tax revenue is? It's real easy. Biggest piece of tax revenue is FICA. That's the money that comes out of your paycheck every week or every 2 weeks or every month, however you get paid. And what that is saying is, yeah, you're still working, but you're either lost a job that paid you more and found another one that's paying you less, or your hours have been cut, right? Hey, I got a pay raise, but I'm actually working less hours, and so now my paycheck actually is a little less. Jason, that's the only thing it could be, is because if you're sitting there thinking about government revenues shouldn't be falling. If we're talking about, think about, we had 187,000 jobs created. I know that was the lowest in a while, but that's still a decent number. And yet revenue for the federal government's down 10%. I mean, that would mean corporate was paying zero. Like nobody was paying tax to corporate. That's not happening, right? It has to be what you were just saying. It has to be.
Yeah, if you had 3 jobs and you're cut down to 2, or 2 jobs down to 1, or if you were at 40 hours a week, you're down to 20 hours a week, that doesn't show up in the jobless claims, but it shows up in lower tax revenue for sure, Joe. It's what it is. Everyone's jockeying for positions. This thing gets a little worse, Joe.
Pick the Radio News Hour. Jason and I wrapping it up right after this. (800-951-0592). Joe and Jason wrapping up this Thursday. Gold's up almost $4 right this second, 19.19. Silver's up 20 cents, closing in on $23. Today's special, $10 liberties, 1 through 9, 1,080. 10 or more, 1,075. By far your cheapest entry point here. Listen, start stacking it. This was not the number anybody wanted to see. This is, again, I think this reiterates what S&P came out with the banks, Jason. This isn't good. This is not what banks wanted to see. And then, of course, news like, we didn't really get into it, but the Chinese developers missing interest payments, this whole thing globally, everything feels like it's on the razor's edge right now, and they're just waiting. When is the dam gonna break?
Doesn't it feel like it's already broken, even like a year or 2 years ago? And just somebody is just making it look or sound better than it really is, Joe. It's just, something is just barely floating this thing. But it sure seems like with all the news economically that it's already broken. It's just not what we see in all the old videotapes of, the 1929 crash or the 87 crash, and you see, the stockbrokers with their heads in their hands, and it's just not like that right now. But if it just continues to keep doing what it's been doing the last 3 years, Joe, and it just keeps on going, I mean, sure feels like the lower standard of living is slowly being crept into people's minds. And when there is no people standing up and actually questioning, the average people, the people that don't listen to this show, they're not going out and asking the questions and wondering what's going on. They're not demanding something better, which means most people are going to, I guess they're just accepting a lower standard of living, which is which is why you buy gold and silver. Protect your standard of living, Joe.
Yeah, I mean, it's something where, again, the fact of the matter is they put us in this position. It was idiotic economic policy. And every book on economics ever written would tell you having interest rates at zero for 15 years, taking a balance sheet from $700 billion to $9 trillion, it is economic suicide. And this is what we're facing. And again, by design, I think this has been the plan. They want a digital currency. They're going to get a new money system. And believe me, if you have the gold, you will benefit when that new money system comes around. You got to have it before then. 800-951-0592. $10 liberties, 1 through 9, 1,080. 10 or more at 1,075. And Jason, we got a great half-empty cup coming up next. Bill Roberts is going to be joining us. We always love having Bill. He's got great information about food supply and what's happening in the beef industry in particular. But Jason, really, when it comes to food and agriculture, Bill has his fingers on the pulse.
Yeah, we'll have definitely a good conversation as he's going to be bringing his audio from a new location. So it'll be a good conversation. That's why we have him on once a month, Joe.
God bless everybody. Listen, get prepared. This thing is going to end up pretty much just the way we said it. It's just one of those things where we're going to be the last to know, right? So take care. Add to your portfolios. We're coming right back.